If you're thinking of filing all your old tax returns at once, you might want to hold off. There's a reason why filing everything could hurt you more than help. In this video, I'll reveal why filing all of your past due tax returns might not be the best strategy and show you smarter alternatives that could save you a lot of stress and a lot of money. I've worked with clients who thought filing everything at once was their only option, but by following a different approach, they avoided unnecessary penalties and fees. By the way, I'm Brad Paladini, a tax attorney with 12 years experience helping people manage back taxes. I've saved clients millions of dollars, guiding them through smarter, more strategic filings. Before you go ahead and file all of those past due returns, you need to first understand the 6-year rule with the IRS. The IRS has published guidance stating that in most situations, someone who has not filed tax returns is only required to file the last 6 years. So if you haven't filed tax returns in 20 or 30 or 40 years, it's most likely not necessary to file all of those returns. In most situations, the IRS will only require the last 6 years. Now, again, this isn't true in 100% of cases, and in certain situations, it may be beneficial to you to file more than 6 years of returns, but you should be aware of this rule before you go ahead and just knock off 20 or 30 years of returns. And this is something that we've seen more than once at our firm. A client will hire us after already hiring a CPA, and that CPA will file 20 years of tax return. And this harms you in multiple ways. First, you're now obligated to pay the tax from 20 years ago since you filed it, where if you never filed the return, you wouldn't have an obligation to file it. There's interest and penalties that have accrued. Interest over the past 20 years adds up no matter how small the bill was 20 years ago. And you've also paid your CPA way more money than was necessary because you could have paid him or her for 6 years of returns, but you paid them for 20 years of tax returns. Why do CPAs do this? Typically, they just don't know any better, right? They're unaware of the 6-year rule and how it works, and they see 20 years of missing tax returns and file it all 20 without giving it much of a thought. So how do you know if you should only file the last 6 years of returns? The only way to know for sure if you are only required to file the last 6 years of returns is to contact the IRS. So if you have a IRS revenue officer assigned to your case, you should have a conversation with him or her to see if the IRS is going to follow that 6-year guidance. Now, you shouldn't always take the IRS revenue officer's word for it. I've had cases where they tried to tell me that the client was required to file 10 or 12 years worth of tax returns, and I politely pointed them to the guidance that says 6 years is sufficient in most cases, and that they need, some approval before they can ask for more. And they backed down pretty quickly, and we're only required to file the last 6 years. But really, the only way to know for sure is to ask. The second thing you need to be aware of is the IRS's collection statute expiration date, or the CSED. The CSED gives the IRS 10 years to collect on a tax debt. And that 10-year period starts when a return is filed. And you may be asking, why does that matter? We're talking about a situation where I haven't filed in 20 years. Obviously, the CSED hasn't started. That may not actually be true. Because in some situations, when you don't file a tax return yourself, the IRS will step in and file a substitute for you. So they'll basically make up a return based on whatever information they have, assess a liability, and then try to collect on that liability. So if the IRS made up a liability for you, and that liability is now 9.5 years old, it may not be worth it to file that tax return. You also get into situations where you're kind of in a gray area. So maybe the IRS filed a return that was from 7 years ago, right? So there's still a few years left on the statute of limitations. Depending on the amount of that liability, it could be beneficial to file a return, or maybe you just forget about it. Because even if the IRS has filed a return for you, you can still file an original return. So for instance, we've had clients come to us who maybe sold a house, 7 or 8 years ago. And the IRS will get a copy of that sales transaction and they'll see, hey, this person sold their home for $500,000. And what they'll do is they'll figure that you made $500,000 on that home and ignore the fact that you bought that property for $450,000, right? And you really should have only owed taxes on the $50,000 of gain. Instead, they'll tax you on all $500,000. In those cases where the liability is maybe way more than what it should be, and there's still a few years left on the statute of limitations, it may be beneficial to go farther back than the 6 years to correct that liability. What I hope you are gathering from this video is that it is not a straightforward answer in terms of how many years you should go back and file. And anyone who is telling you if you're missing 20 or 30 years of returns to file all 20 or 30 years of returns is just providing bad advice. So before you go ahead and start filing all of these returns, you need to make a strategic decision about how many years to go back. Now, I know some of you are thinking, I just want to get this over with. Like, I haven't filed in 20 years. Why should I take all this time and effort to figure out how many years I actually need to file? I just want this part of my life to be over with and move on. Again, by filing years that you aren't required to file, you are increasing the liability because now you're obligated to pay taxes on that return from 20 years ago since you filed it. If you never filed it, you wouldn't have had to have paid taxes on it. You're paying interest on top of that. You're paying penalties on top of that. And you're paying a CPA or an accountant to prepare a return that doesn't really need to be filed. So I know it can be stressful and overwhelming when you've fallen off the bandwagon and haven't filed returns in quite a few years and really want to get it taken care of. But take a deep breath, think strategically about the issue before you go ahead and create an unnecessary, even bigger headache than you're already in. If you're finding this information helpful, go ahead and hit that like button. It helps other people find this video and get the help that they need. And if you're dealing with multiple years of unfiled taxes and want to find the smartest way to approach it, click on the link below for a free consultation with our firm. My team and I will help you strategize and avoid these costly mistakes.